everyone. I'm Dan Basse, president of Ag Resource Company, joined with Dr. Bill Tierney here to talk about the big week of Argentina. You know, as we look back in history, Bill, I think this week is going to go down in the annals of being something of importance for everybody in agriculture.
Yeah, I can't recall a time, except of course, Black Sea events. War breaks out in the Black Sea. They impose export embargo. I can't think of another event in the last 10 years or so where there's been such an abrupt change in perceived ag fundamentals.
Well, if we think about it, early in the week, we of course got export taxes being reduced or eliminated in the case of the grains and sun seeds, 20% on corn, 23% on wheat, 28% on sun seeds. Mm-hmm. This gave immediate profitability to the Argentine farmer. We think in the estimate of $240 per acre in terms of corn. Then late in the week, they go to a full devaluation, giving another, however you want to calculate the percentage, between 30 and 40%. Mm-hmm. I mean, what a holiday layup or Christmas present for the Argentinian producer.
And, I know the Argentinian farmer has complained bitterly about the export taxes, but just today I double-checked on a study that was going to be published by one of my former colleagues at Kansas State University. He moved on to Purdue. What he's done is he's taken a look at cost of production and net revenue for typical corn enterprises in the United States, Brazil, and Argentina, and typical soybean enterprises in the United States, Brazil, and Argentina. Now, there were 7 typical farms that were constructed based on data using uniform methodologies across countries. Apparently, they even looked at 32 countries, but what we're interested in is a comparison between the United States, Brazil, and Argentina. Now, the study for soybeans was released December 4th on the Farm Doc site at the University of Illinois. Excellent site, great information. What they said was of the 7 farms that they examined, 2 in the United States, I think 3 in Brazil, and 2 in Argentina, only 1 did not earn profits, economic profits, during the period 2002 to 2014. That one was an Iowa farm. An Iowa soybean farm didn't earn profits. Some of the highest profits earned were in Argentina. So even though farmers were being taxed 35%, they were still able to earn very significant profits in the period 2012-2014. So what this study strongly suggests is that the depreciation in the peso, the depreciation in the real, the reduction of export taxes is going to create a huge additional incentive, which apparently already existed. So what I think this means is sharply increased competition from Argentina in the next several years.
An export powerhouse in terms of agriculture, if we think about it, corn, wheat, sunseed, soybeans, and maybe even meat products and dairy.
Well, I've been checking with a couple of analysts about how soon they could ramp up beef production, and most people seem to think it's going to take several years at least. So I think in the short run, I think the competition relative to the United States is going to be in crops. The most immediate competition will be in wheat, corn, and then some additional follow-on competition in soybeans. Now, what we're worried about is what might happen over the next several months in terms of their exports. What have you heard in terms of farmers' willingness to sell the huge carryover stocks that they've accumulated over the last several years?
We've only got one day in which the farmer's been able to sell under devaluation, and the 5% export tax reduction made it to the Federal Register today. So prices to the farmer are being increased, and I was hearing today that interior elevators and commercials are being run over with supply. In other words, they were getting a lot of the farmers selling because the farmer wanted to store dollars as opposed to storing beans. So I would imagine that trend will continue.
How much can they actually move in a single month? I mean, aren't there limitations on their fobbing capacity?
Well, I think we all looked at it here at Ag Resource, and we think the maximum is somewhere between 9 and 10 million tons a month. But that's a lot of supply, Bill, to hit the world market.
Yeah, it is, particularly at the end of the marketing year, if that happens. So what do you think is going to happen in terms of the currency? Is it likely to continue to erode, or do you think most of the adjustments already occurred?
I would guess that much of the adjustments already occurred, but I'm not a currency analyst.
I'm not either.
I'm an agricultural analyst, but my guess would be that 14 and a half is going to be the upper range in the peso. Outside chance of making it to 15. Over time, though, it's going to be how the government, the Macri government, reacts and how they are perceived in the world market that directs the value of the Argentine peso.
So how do you think this changes our view on soybean and corn prices over the next several months?
It's obviously an additional weight, if you will, on top of the marketplace. I would imagine that Argentinian farmers next year, Bill, will plant 30% more corn, maybe 20% more wheat, cut back a little bit on beans, but overall, the supply pressures are going to be substantial, and U.S. export share will continue to diminish. My name is Dan Basse, joined by Dr. Bill Tierney, wishing you a very Merry Christmas and a Happy New Year. We hope all of you will return with us in 2016.